I'm Anthony Valeri, Director of Investment Management at Zions Wealth. Thank you very much for joining. As we speak, stock markets have come roaring back from their disruption and in early April from the Liberation Day tariff announcements. However, one area of the market that is still yet to recover is the municipal bond market. And there's a number of factors, they're not really tariff related, but there is value and opportunity in the muni market. So let's jump right into it. We'll start with supply, and in a more thinly traded market like the municipal bond market, supply can have a big impact. On this chart, we show the bond buyer visible supply index. The blue line is the fluctuation day to day, and to smooth that out, we use a 30-day moving average. And you can see that supply started to increase in early 2025 and remained elevated, and that supply put pressure on the market. Now, it wasn't all about supply. The beginning of March through mid-April typically is a challenging seasonal period in the municipal bond market. There were also signs of investor forced liquidations in early April. All of that conspired to pressure municipal bond prices lower and yields higher. And that has shown up in higher AAA municipal bond yields in both the 10 and 30-year area of the market. Now, remember, 30-year municipal bonds are redeemable in 10 years. They behave like a slightly shorter instrument. But suffice to say that yields went up across the board, and AAA-rated municipal bond yields remain very close to some of the highest levels of the past few years. So there is opportunity with still elevated yields in the municipal market. There has been some stabilization in mid-May in the muni market, but for investors in top tax brackets, this is still a compelling opportunity. And as an investor, it is important, muni investor, it is important to look at taxable equivalent yield. And here we look at the taxable equivalent yield of the municipal index as measured by the Bloomberg index, going all the way back to 2006, incorporating the top federal tax bracket to determine this taxable equivalent yield. And you can see how it compares to the taxable aggregate bond index, which is the Bloomberg aggregate index, a broad measure of all taxable bonds, and also the Bloomberg corporate index. And you can see that taxable equivalent yields are elevated relative to their taxable counterparts, both diversified taxable bonds and corporate bonds. And if you go back in history, there's been 8 situations where those taxable equivalent yields spiked relative to other segments of the market. And all 8 of those opportunities have been good ones to be an investor with very strong returns over the subsequent 12-month period, according to the Bloomberg Municipal Bond Index. Only one of those occasions in 2022 did we see low single-digit returns as bonds sold off the following year. And while we don't expect double-digit returns, we do think this is an attractive entry point for investors that need high-quality, tax-exempt income. I'm Anthony Valeri. Thanks very much for joining. We'll speak to you again soon.